We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to have a general chat about Richard Wyckoff and looking at trend change. Price going from a downswing to an upswing. Now quickly, we've had in readtheticker.com we have the full Richard Wyckoff manual that was sold to his students for reference. The idea is to understand the principles. We also have to understand that it was written in the 30s and computers and sophisticated programming was not available then. So we can only imagine what would have happened if Mr. Wyckoff was able to live a couple of hundred years and get hold of some programmers and code up his course, and how he would interpret and how he use volume and price and programming abilities to develop tools to show more clearly to the public when trends are about to change. Now, how Wyckoff did it, here's a quick example. Pop out chart using a pointed figure chart, a rather small pointed figure chart. He'd using the channel lines, as you can see, price is falling, and then when price failed to reach the oversold line, you can see here technical strength indicated by A to hold above the line here. See this arrow here? That means that's demand coming in. Supply failed, demand came in, and it goes up to challenge the upper trend line. So here we have a downtrend and a flattening and then a moving up and then a breakout. Okay, that's what he recognises as a momentum change. That's what he recognises as supply failing to do it. So even though price fell, he believes that the demand came in to accumulate. Okay, so let's go have a look at a Apple chart, which everyone's familiar with. Here we have our down channel again. Okay, and we have the flattening. This is our steps, and a step is bound to form. Momentum weakens, and demand came in on supply and pushed it up. Okay, and then we had a break and we had a test, another break and another test, and we carried on. So okay, that's Wyckoff logic working in 1930s. It is working in 1917. Sorry, 2017. Okay, so what I want to focus on also is a common indicator we have in readtheticker.com, and that's called RTTTrendPowerOBV. Now previously we only used the 21 period, but recently we've expanded that to the 6th, the 11th, 21, 41 and 81 period. And on this chart here I have RTTOBV 6, which is a short-term version, and I have RTTOBV 81. Okay, so we've got a short and long version of the indicator. We also have a momentum indicator. Okay, so for example here we notice that momentum changed here because the lows were not getting lower. For example, lower low, not a lower low, a higher low. Okay, and that was easily referenced by our indicator here. This is a RTT momentum VW, which is a volume weighted indicator. We also have the RTT momentum just based on price. So you can choose which either one you want. So here we have, breaking the trend line, coming back up. Momentum failed to break down. The blue obviously means up momentum. The red means down momentum. So obviously, the safer the trade you want if you're going to go long, you want blue momentum. If you're going to go short, you prefer red momentum. To understand this, you really want to research the 3-10 momentum rule. I've just changed the periods to be more sensitive or take it to longer terms. This is the 620 momentum. Right, so here we had a momentum change. For example, price is going down, we have momentum change here. 2 steps up. If I click on that, see momentum change here again reflected there. So you can draw a channel. That's just the indicator, just a way to show it mathematically. But what I want to focus on for new players and members is that using the RTT Trend Power OBV is actually becoming quite useful. So because it's price and volume, what we want to see on the uptrend is the demand and control. Okay, so I'll just clear all my chart, double click to clear. Here we see the buying or the upswing, and the volume price pressure is very confident, and when the penetrations below zero, i.e. the red colour, is infrequent and very few. Okay, so that basically means whenever price is going down, demand is there to meet it. Obviously it's an uptrend, so that's great. We also have a situation here where we have, it's an uptrend, but some heavy volume came, because this is a price volume indicator. You see that for the first part there, very heavy volume, so that was a bit of a warning, but then it dried up. I'm talking about these points here. Bang, bang. So you can see here, heavy volume, shoots back up, a bit of a test, and it carries on. And it, behaves itself till about there. So volume was, demand was in control, then it fell away. Another situation here is we have a good recovery here, and then some heavy volume coming to challenge the trend. Demand stepped up and overtook it, and then we got our normality there. Okay, so what I'm trying to say is the RTTOBV 6 is a good example of when demand is in control of a trend. Very, very good control of demand here, because whenever price goes down, even though it might be pretty scary, for example this point here, see how scary that was? Demand pretty much holds on. There's a bit more volume coming into there, but eventually it holds on, it carries on up, but it's still in power here. Now, why is this important? It's important to watch price action or trend lines, well controlled, well supported price action, and you want to see the change between well supported and not supported. For example, as I repeat myself, well supported, not well supported. It repairs itself, then it carries on. Well supported, not well supported. And as you notice, the trend hasn't actually changed yet, but it's not supported. It's a big warning. The slower indicator can be used as a trend. As you see, it goes down there. If you're going to be bullish, you don't really want to see it break zero. Okay. So the RTTOBV 6 and 81, so long versus short, is very good to monitor the momentum change, how well price action is supported by demand and volume, because the main point is you don't want to see any unwanted volume in the wrong places, because that is an early warning sign that someone is selling and the demand wasn't really there to pick it up. So what you want to see is when the supply comes in, demand is there to pick it up. And if there is a bit of a challenge, like for example as I highlighted here, we had a big challenge here to demand. Some big volume came in there. We had a big challenge there to demand, but some big volume came in. We want to see the demand soak up that supply, repair itself, and continue on. And we had a big warning here that supply came in. It tried to repair itself, but unfortunately it fell away very, very quickly. Okay. And here's another point here, some demand popping, but look at the supply coming in, never really recovered, even though price bounced up. We had some demand coming here, but the correction was pretty severe, so this was the turning zone, the momentum changing. And we can watch momentum indicators to see whether the demand is gaining control or not. Now Apple's a good example of showing well supported demand, poorly supported demand and recovery, momentum trend changes through RTTOBV, and also our momentum indicators. So I encourage you to review your charts with these two indicators. I also, just quick, I've been having a bit of luck lately, or a bit of success I should say, using the same tools on crude oil. This is the futures contract. I'll load the full page, it takes a bit of a time. Because I've got many charts on this page, about 10 of them. As you can see here, price was pretty much in a sideways trend. Come here. Okay. But the demand started to repair itself. Lots of supply, repair. Even though price is falling, supply was weak and demand repaired itself, and it took off. Okay. And momentum, actually, this is very telling. Demand was repairing itself, took off, good support of demand over here. Momentum wasn't quite there yet. It's down in the price, so it gave an early warning signal. Good trend here. So this is a high risk trade, but you know, selling puts or something like that is quite feasible. Thanks for watching.